What if we told you that the global economic outlook might not be as grim as you think? What if the recession that some predict isn't a certainty? Well, let's dive into the current economic climate and explore the differing perspectives on this issue. A trio of Wall Street powerhouses, Bank of America, Morgan Stanley, and Deutsche Bank, have been making headlines with their predictions. They're forecasting that US stocks could see a drop of over 20% in 2023. The reasons? A potential liquidity crisis induced by the Federal Reserve and lower earnings outlooks. However, it's not all doom and gloom. These financial titans also anticipate a rally, with the S&P 500 recovering by the end of 2023. Bank of America and Deutsche Bank even predict the S&P 500 ending the year at 4,000 and 4,500 respectively. So, while the Wall Street giants are bracing for a potential storm, they also see the sun peeking through the clouds. On the other side of the coin, we have US companies, who seem to have a slightly more cautious outlook. While global banks are predicting a significant rebound, corporations like FedEx, RH, and Best Buy are expressing concerns about a potential global downturn, along with challenging macroeconomic conditions. These companies are not alone in their apprehensions. Applied Materials, a major player in the technology sector, has also voiced its worries about slowdowns in customer orders. This concern stems from a dual sense of uncertainty and potential weaknesses in consumer electronics and PCs. It's clear that the technology sector, which has been a driving force in the US economy, is now facing its own set of challenges. Additionally, the automotive industry is also feeling the pinch. Ford, for instance, is grappling with a shortage of parts, which has impacted its ability to complete the production of a significant number of large pickups and SUVs. This supply issue alone is expected to cost the company an additional $1 billion in just one quarter. So, while Wall Street banks may be predicting a rosy future, American companies are looking at the road ahead with a bit more caution. They see potential pitfalls and challenges that could impact their bottom lines and overall economic growth. For these companies, the road ahead seems a bit more challenging. So, we have two different narratives painting two very different pictures of the future. But what does this mean for you? On one hand, we have global banks like Bank of America, Morgan Stanley, and Deutsche Bank forecasting a rosy economic outlook. They anticipate a potential stock market downturn in the short term, but a recovery by the end of 2023. On the other hand, US companies such as FedEx, RH, and Best Buy are more circumspect. They express concerns about a global downturn and challenging macroeconomic conditions. These companies are lowering their outlooks for the third quarter, potentially making it the worst for earnings since 2020. The contrast between these perspectives is stark, yet it's important to remember that economic predictions are never foolproof. Even the most informed and experienced analysts can only make educated guesses about the future. The economy is a complex and dynamic system, influenced by a myriad of factors that can change rapidly and unpredictably. So what's the takeaway? Stay informed and be prepared. Keep an eye on both the optimistic views of global banks and the cautious outlooks of US companies. Understand that the economic landscape can shift, and having a balanced perspective will help you navigate these changes. As we venture into the future, the one certainty is uncertainty. But with the right information, we can navigate whatever comes our way.